This week's US labour report will be in key focus as investors seek to evaluate the Fed's communication on interest rates. The Fed have signalled 2 rate cuts to come this year, and that's been supporting the US dollar higher over the last few weeks. So, on Friday, November the 1st, a surprise in the jobs report could move the US dollar significantly. This is where Seasonax's event feature is so useful in assessing what kind of moves the dollar could see on a surprise print. Here you can see, looking at the dollar index, over the last 5 years, looking at the non-farm payroll reports over that period, and the 2 days after the report, we can see that the maximum gain is nearly 1 percentage point. The maximum loss is just over 1 percentage point. And you can see here that once you get about half a percentage point move in the dollar, that is towards the higher end of the move. And once you hit 1% or around 1%, that's often the extent of the full move over those 2 days. So we can see there's a bias for dollar strength, and helpfully, if you look at the column underneath, you can see the maximum rise and drop on each non-farm payroll report. That's very helpful, as well as the start price and the end price. That's very helpful as well. You can combine this with calendar studies and maybe look at days of the week where the calendar came in above market's maximum expectations or below minimum expectations, and then how far that corresponding move was. Of course, you can look at it for the day after the non-farm payroll report, 3 days, including the day before. So there's a whole variety of studies that you can do here. Remember, historical performance can help traders gauge the market reaction to non-farm payroll releases, but it is important to notice the variability in profit percentages and price movements. Don't just trade it, Seasonax it. Come along here to Seasonax to sign up for literally thousands more seasonal insights that are just waiting to be revealed.